Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today we are going to cover Dollar General. It is August 21st, Monday, start of a new week. Last week was quite a bloodbath, a little bit of red all over the place last week there. Starting off about the same this week, though we are seeing a little bit more green. Like I said, we are going to cover Dollar General today. This is out of the consumer discretionary sector. Let's jump right in. If you want to know more about this company, check them out at www.dollargeneral.com. That is their homepage. That's www.dollargeneral.com. That is their homepage where I pulled this information from. Dollar General Corporation, ticker DG on the New York Stock Exchange, is proud to serve as America's neighborhood general store. Founded in 1939, Dollar General lives its mission of serving others every day by providing access to affordable products and services for its customers, career opportunities for its employees, and literacy and education support for its hometown communities. As of May 5th, 2023, the company's 19,294 Dollar General, DG Market, DGX, and Pop Shelf stores across 47 states and Me Super Dollar General stores in Mexico provide everyday essentials including food, health and wellness products, cleaning and laundry supplies, self-care and beauty items, and seasonal decor from our high-quality private brands alongside many of the world's most trusted brands such as Coca-Cola, PepsiCo, Frito-Lay, General Mills, Hershey, J.M. Smuckers, Kraft, Mars, Nestle, Procter & Gamble, and Unilever. So they are basically a retail store people shop at for groceries, for some other home goods items. More of a discount, dollar store. I know it's Dollar General, but dollar store, right? Their prices are typically lower than your average retail, like a Myers or a Kroger would be. And forgive me if you don't know Myers or Kroger. I know from Michigan, some of these stores are not familiar to people who are in other parts of the country, but they are basically retailers that sell, your groceries as well. So where I'm at, Kroger's is big, Myers is big, Dollar General's and companies like that. So they are a retailer that sells your groceries and some other home goods services there. You're probably familiar with them. Again, been around, I think the key notes here, 19,294 stores across 47 states, as well as located in Mexico, and they have been around since 1939, so they have been around the block, seen a lot of the downturns in the economy. They would have caught the tail end of the Great Recession, the Great Depression there, the Great Recession here in the early 2000s, the dot-com bubbles, the 70s wars, several world wars, all that they would have caught here. So they know how to weather some of the storms, and if we are going into a recession, a lot of people will look at cheaper stores like a Dollar General to do some of their shopping at. So they may actually be a beneficiary if we do enter into, which I believe we've been into some economic decline since about 2019, but that's for another video. But again, if you want to know more about them, www.dollargeneral.com, that is their homepage. Let's keep on going here. And they were down 0.37% on the day. Not a huge drop, but a drop nonetheless, so I thought we'd cover them. We are talking about Dollar General Corporation, ticker DG, again out of the consumer discretionary sector. Closed the day out $162.38. 52-week range as low as $151.27, as high as $261.59. So they are closer to their 52-week low than they are their 52-week high. Average volume 3.1 billion. Today's was 1.5. You can see that drop off there. It looks like about 10, 11 o'clock. Really big drop off. They rebounded a little bit in the afternoon, but big drop off overall. And then a bit of a rebound there. Market cap of 35.617 billion, a beta of 0.28. So they are much less volatile than the overall market. Price to earnings PE ratio of $15.32 per share. Decent there. Earnings per share very high, $10.60 per share. Earnings date August 31st. So you would want to look for that here in about 10 days. We're going to see their earnings, how they're doing. For dividend, $2.36. They do pay out quarterly. We'll see that here in a little bit as well. They have a low yield at 1.43%, but that's not necessarily bad if they are increasing that, which we'll see that here in a little while as well. Ex-dividend was July 10th. Looks like they paid out July 25th, so they should have another ex-dividend date coming up here in a month or two. So if you were to buy them now, you would be in line for their next dividend since they've already paid out July 25th, and a 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated, just one of the sites I like to look at for information. $186.37. So they see some upside potential in the stock price here. Now, I like to look at statistics and look at dividend yield theory to see if we're potentially undervalued at a high level here. So to do that, we jump over. You'd go click on statistics, go down to dividends and splits, look at their 5-year dividend yield. Their average is 0.84%. Compare it to their current 1.43%. 1.4 over here, forward annual dividend yield, same thing. It matches their current of 1.43%. This is significantly higher than their 5-year average. So that speaks to some undervaluation here, about 50% undervalued, really, if you use simple math to go that. If they were at 1.68, that would be 50% undervalued. So not quite 50%, but significantly undervalued, at least according to dividend yield theory. Very low payout ratio, 21.11%. So they have a lot of runway to increase this dividend. So even though it's down here at the 1.43%, they are very low on their payout ratio and have a lot of room to increase that. We'll see how fast they are increasing that here in a little bit. And I also like to look at their financials. A lot of good information here. You're going to find their balance sheet, their income statement. You can look up their debt to equity ratios, their revenue. Are they growing their debt over time? Are they decreasing debt over time? How is their revenue? Is it growing? You want growing revenue. You want more assets over liabilities. All that information is available. We also want to look at free cash flow. We want growing dividends, and dividends are paid out of free cash flow. So we want that growing over time. 2020, 1.4 billion here. 2021, 2.8. So big jump up from 2020 to 2021. Drop back down into 2022 to 1.7. And they've just reported, looks like the first quarter here in 2023, so at 423 million here. So we would need to watch them and see how they're doing, but so far so good. It looks like at least through the first quarter, if you were to annualize this out, they might be a little bit lower than they were last year. So again, you'd want to watch that. If this was to continue to show a decrease here, you might see a trend. That might be a 3-year trend. But if you look at repurchase of capital stock, part of that decrease might be an increase in repurchasing their own shares, which you can see here, 1.2 in 2020, 2.4 in 2021, 2.5 in 2022, and it looks like they're buying back 2.7 in 2023. So I've mentioned it before. I don't mind a little bit of a decrease in free cash flow if they are using it to buy back their own shares. And right here, close to their 52-week low, would be a good time to do it because they may be relatively undervalued right now, and you want them buying back shares when they are undervalued, right? That gives you more of the company, even if you don't add any more capital. So overall, from 2020, at least right now, I won't say they're growing, call it flat, a little bit flat, or maybe in line with the 2020, but not necessarily growing free cash flow. So that might be something to watch on this one. Now we'll jump over to stockanalysis.com. I always recommend more than one source so you can back check the information you are getting is accurate. They've got 20 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $155. That would be a 4.5% decrease from where it currently sits. They have an average estimate of $194.85. That's pretty close to what we saw with Yahoo Finance on the previous page. That would be a 20.05% increase in the stock price. And they have a high estimate of $270, which would be back close to their 52-week high, and that would be a 66.35% increase. All the while, you could collect that 1.5%, near 1.5% dividend yield along the way. Now, I like to look at statistics here. You're going to find the same information you find in Yahoo Finance, though it does go back a little bit further. Their balance sheet, their income statement, growing free cash flow. One of the things I like to look at here is ROE, return on equity, and ROIC, return on invested capital. I like 10% or both. For this one, the return on equity, 40%, very nice number here. Return on invested capital, 9.9%. It's not exactly the 10%, but fractions of a percent there. I'm not going to quibble over splitting hairs there. So close enough for me. Good numbers all around here on this one. The only thing that you might want to watch is the free cash flow. Though, again, if they're paying back debt, rebuying shares, there are reasons for free cash flow to be down. So that's why you want to look at more than just their free cash flow. Compare it to their revenue. Compare it to their debt paybacks. Compare it to their share repurchases if they're doing that, which this company is. And if they are paying down debt, repurchasing stock, and that is the reason for their free cash flow decreasing a little bit, I am okay whenever that is the case. Let's jump over to the dividend. Now, as we said, very low payout ratio, 22.24%. So it was 21 and some change on the other one, close enough. Not exactly the same, but in the 20s, we'll call it. Dividend growth, very high dividend growth, 17.53%. Went back to 2020, July 6th of 2020, they were paying 36 cents. April 5th, 2021, they jumped it up to 42 cents. April 4th, 2022, they jumped it up to 55 cents. April 10th, 2023, they jumped it up to 59 cents. So I would be willing to bet if they are going to continue this streak here, they are going to jump it up again in April of next year. Very nice dividend growth over here. Fast grower, very low payout ratio. Might be one to throw on the watch list. Does look like it might be in a bit of a downtrend, but very close to its 52-week low. So this one I might be interested in at least adding to my watch list and keeping an eye on it if it was to set a new 52-week low. If you are looking for something in the consumer discretionary sector, this might be one worth taking a look at. This is the vested interest stock screener. Go ahead and pause this. This is how I set up the videos as well. This is how I'm looking at a company on a high level to see if I want to do any more of a deep dive and get into the financials. If it meets 4 of the 7, if it's not a financial company, if it's a financial company, I go 5 of the 8. That's it for this one. Trying to find value in this market. These are quick hitters, so trying to keep them, under 10 minutes, but lately they've been going a little over that, so trying to keep them under 15 minutes. Anyway, again, trying to find value in the market, bring you a stock that's pulled back on the day so we can see if there is value there. Dollar General was the one we looked at today. This one is looking a bit attractive to me. Let me know what you think down in the comment section. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching, stocks we're avoiding, just tips and tricks that we've learned along the way. You cannot benefit from my investments, but you can benefit from my experience, good and bad. You should not be afraid to share the bad. We all make mistakes. Don't let the potential for making a mistake keep you from investing. We are all going to make mistakes. The best investors in the world make mistakes. None of us are perfect. And it's not about the mistakes you make. It's about how you respond. Keep on going and try not to make the same mistakes over and over. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company or stock you'd like me to add to the rotation and see if I can work it into the stock pick of the day video, go ahead and drop it down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.